co-panelists, esteemed members of the audience. As Pam said, a lot has been said about financial inclusion already, and one can go on and on about financial inclusion. So while I'll try to be brief, ma'am, you just say come back, in case I'm exceeding.
No, it was very interesting, I want.
Now that's a challenge. Financial inclusion in short is basically broadening of the financial services, so more financial services for people. Deepening of the financial services, so therefore more financial institutions offering financial services. Customer protection and consumer education. This is financial inclusion, and how does ICT, how does technology help out? Now the conventional wisdom is that ICT will help out by opening accounts, and that is what we have been following. So therefore, while we acknowledge that brick and mortar branches can't be spread throughout, in fact in ICT we have got 32,600 odd villages. So therefore, the emphasis or the onus now comes onto the business correspondents. BCs with their handheld device, common service centers with their laptops, connectivity is an issue, the hardiness, the robustness of the handheld device, that is an issue. But then, in Jharkhand, we are fortunate that Aadhaar, in terms of Aadhaar cards being issued, we are perhaps number one in the country. So therefore, there is an eKYC system which has been envisaged, which can help in opening accounts, which is once the customer or once the consumer having an Aadhaar card, he permits UIDAI to share his details with the bank. Then, as soon as he approaches the bank and he identifies himself by the biometric identification, the bank can straight away connect to the UIDAI server, provided it has an agreement with UIDAI, and with the software, straight away download the data onto its server. Therefore, no KYC independently by the bank, eKYC done automatically, and it's non-repudiable. It's a win-win for all. That's the new thing. That's the way forward. ICT has a big role to play in that. In fact, Nachikeet More committee recommendations is the buzzword today. It's created quite a buzz, and it says that by January 1, 2016, every adult resident Indian will have a bank account. And how will that happen? eKYC. Now, he also goes on to say that within 15 minutes walking distance, every resident Indian will have access to an avenue where he can deposit cash, where he can withdraw cash, where he can get credit services, where he can get insurance products. Now that is the challenge. How does that happen? It's through ICT only that this can be enabled. Now maybe 1st January 2016 is a bit ambitious. But then, it has set the benchmark. Even if we exceed it by 6 months, even 1 year, fantastic. 1st January 2017, if every Indian can have all these services, what could be better? This is the challenge ICT has to, technology has to gear up for. Acceptability of third-party KYC is definitely an issue. Today, banks are not confident enough of accepting third-party KYC. Here, technology has a role to play. Here, technology has to step in and say that, see, once this is done with one institution, you need not do the KYC for the same customer time and again. It's a waste of resources, it's a waste of time, and the customer feels harassed. The new thinking which is coming out is that we have been focusing on credit all along. Now, why don't we stop focusing on credit? Let us focus more on easing payments, let us focus more on easing remittances, Let us expand the remunerative saving instruments. For instance, those consumer price linked inflation bonds, which give a real return to the customer for the first time. Let us give him access to easy to understand insurance products. Credit will follow. That's the new thing. Example of SHGs. I mean, they are encouraged to have savings amongst themselves. They put in small amounts in a small kitty, and then gradually the credit starts flowing. This is the model which has done well. This is a model in which everybody has more confidence, and perhaps that could be the way forward. Now, we have done quite a bit. I mean, in certain cases, we have done much more. Our technology is much more advanced than any other Western country. For instance, SMS alert for bank and credit card transactions. America doesn't have it. We have. So, in America, if a fraudster gets hold of your credit card, before you know it, before you are aware, he can swindle the entire amount. Today, as soon as he touches, he tries to siphon off money, you get an alert immediately. Card not present transaction, we have gone in for an additional factor of authentication, the one-time password. That has been very effective. Chip and pin technology, even though it is expensive, we are now gradually moving towards it because the card cannot be cloned. As soon as there is a chip, the magnetic stripe card that can be cloned the data, the chip cannot be. The other thing which Reserve Bank has is now advocating, and perhaps we'll have a circular shortly, is setting up of a payment system where funds can be transferred from a bank account holder into another to another person who doesn't have a bank account at all. So therefore, I suppose I want to send money to my son who's in a hostel and say he doesn't have a bank account. I can simply SMS him a particular code. He can access my bank's ATM, enter that code, withdraw the money. No need to have a bank account. Now there has been a conscious decision to allow mobile banking through banks only because there are certain other considerations, security-wise, safety-wise, confidence-wise, in allowing non-banks to go in to have free access to the payment services. But then we have allowed a mobile wallet system. The only thing is that cash withdrawal is not permitted over there. The mobile can be charged with cash. It can be used to make payments for electricity bills or whatever. But then cash cannot be withdrawn like the schemes M-Pesa and all which are there in Kenya and Tanzania. We do not have the confidence yet. The MSMEs, they are engines of growth, they are engines of employment, play a fairly good, effective role in export credit. And in Jharkhand, MSMEs, I think we have one of the highest portfolios of MSME, and there's a large potential in Jharkhand. Now, MSMEs typically what happens is that, say, a micro and small enterprise which manufactures goods for HEC. Now, HEC may not pay the MSE unit in time. What does the MSE do? It can't pay back to the bank. The bank makes the account NPA. The guy cannot access bank finance again. Here, technology has a role in the sense that a trade receivables exchange is something which is on the anvil, where MSME will go and sell the receivables in the market, it will get the money. So therefore MSME becomes a viable business. Now the person who is buying this credit, he's buying the credit which has a much better rating than the MSME. He's getting credit on HEC or maybe Tisco or Telco. So he's happy. And the buyer, HEC or Tesco or Tilco, he also gets a better price from the MSME. who perhaps is loading on that delay in payment, which he need not once he can sell the receivables in the trade receivables exchange market. Technology has been able to pay that. Another thing that State Board Committee has proposed is that the entire credit history of every customer will get stored into these credit rating agencies. Till now, only the banking habits, the banking payment track record that gets recorded, and that too perhaps in a not a very transparent manner. Tomorrow, every payment, every electricity bill payment, every mobile bill payment will get recorded into the database, and the lender will access this particular credit history to determine whether to lend to that particular customer and at what rates to lend. So if you've got a wonderful track record as far as the payments are concerned, you've been paying your bills on time, you'll get credit easily, you'll get credit at much cheaper rates. Yeah, that's the challenge for technology again. Consumer literacy and protection, that's another major plank of financial inclusion. Now technology here, it can magnify the reach of finance for bad purposes as well as good purposes. For instance, you'll have, many of us have got SMSs and emails from the Reserve Bank of India governor saying that $1 million is waiting in the RBI for you, and you just need to give your bank account details. Obviously, technology has enabled that sort of thing to happen. At the same time, it can also offer answers to check fraud. Social media can be used to enable the public to identify fraud and help regulation. The bottom line really is that when products have network effects, as ADG Pradhan was saying, anything networkable is crime workable. Technology can ensure not just interoperability, it can also ensure security and thereby boost consumer confidence in the financial system, and thereby financial inclusion can be revolutionized. Thank you very much.